These are the 4 sites I use to value stocks and shares fast. The reason that you should want to value stocks fast is because there are thousands of stocks out there that you need to compare very, very quickly so that you know which stocks are the best ones to spend the most of your time actually doing your due diligence on, so that you can find a needle in a haystack. Once you've identified a stock as potentially being a needle in a haystack, you can then use these 4 sites also as a way of doing the remainder of your due diligence, so that you don't have to pour through the SEC filings and 10Ks and take ages to get what is essentially the same information. Now, there's a lot of value in going through a 10K, and if you're that sort of person, kudos to you. But really, I think if you value your time and if you want to be comparing a lot of stocks, then what you're going to need is sites that make the valuation process simplified. One thing I want to say is I don't recommend personal investing for people that don't enjoy it. And I think that if you want exposure to the stock market, what you should do is buy an index fund. But that's a topic for another time. If you do enjoy personal investing and you want to allocate some money to that, these are the 4 sites that I think that you should visit. Now, as I've said, the first 4 sites in this list are free. However, there will be one bonus site that is a £20 per month subscription. Now, you don't need this site, but it does consolidate about 3 of the free sites and builds on those free sites in a really easy to use and easy to interpret way. It consolidates all the information. So there's a lot of value in the 5th site that I'm going to talk about, but first I'm going to talk about the free sites so that you can decide whether you want to spend the £20 per month subscription, whether that's right for you. With that said, let's talk about site 1, Yahoo Finance. You've probably heard of this one. What's obviously brilliant about Yahoo Finance is it groups together a lot of very useful information. So you've got the market price, but also on the front page of the site, of the stock ticker page, is you can see its pre-market price. So you can actually see what the price will be when the market opens, so after hours trading. Next, the chart has loads of little features, loads of indicators and other bits of interesting information that go along with the market capitalization chart. So you can see the share price chart, and then you can pull down something like volume of trading activity. So this is how much money is being bought and sold in that particular stock. Another thing I found really helpful about Yahoo Finance is its key ratio page. It's got a lot of useful data. You can see the amount of institutional investors versus retail investors. You can see how much debt a company has. You can see its equity to debt ratio, all sorts of really helpful things that might help you value the business and see whether it's right for you. Now, the downsides of Yahoo Finance. The site is heavily automated, and sometimes I feel that it can pull data wrong, and when that happens, it's such a big company that there's really no one there you can get in touch with to talk to about it. There is almost no user support, which there is on some of the following sites I'm going to talk about. Now, number 2, QuickFS. QuickFS does roughly the same thing as Yahoo Finance. It pulls SEC filings, so 10Ks, and it pulls filings from other companies in other countries as well on other exchanges. And so it's got a real broad spectrum of companies that it lists on QuickFS site, and it's a lot less bloated than Yahoo Finance. Again, as I've said, QuickFS is free. You get a much better backlog. You get a 10-year backlog rather than a 4-year backlog on Yahoo Finance. But an enormous benefit that I love with QuickFS is I once noticed a problem on their site. A stock that definitely should have been showing up wasn't, and so I believe it was Apple. And so when I emailed QuickFS to tell them that this stock wasn't appearing, I got a response within 1 hour. I wasn't expecting a response at all, and they responded within 1 hour telling me that they'd fixed the bug and also thanking me for getting in touch with them. So yeah, amazing customer support on this site, which is one of the main reasons that I love it. But now the cons for QuickFS. It is free, but in order to see some of the cash flow pages, you do have to have an account, and to have an account, you have to give your card details. Now, I felt very uncomfortable doing this, but I promise you, I've done this, and it gives me access to those pages, and it hasn't charged me once ever. The reason setting up an account takes your card details is because there is a premium version of QuickFS where you can pay to download Excel spreadsheets and stuff like that. You get a little bit more extra versatility on the platform, but you absolutely do not have to pay for this service, and you don't need to pay for this service for the site to be very, very useful. So yeah, you can get access to the cash flow pages for free. You just have to set an account. That involves getting your card details, but you will not be charged. Another little con, this is a tiny con, but once you set up an account and you go to the cash flow page, free cash flow is actually on the key ratio page for some reason. So yeah, go to the key ratio page, scroll down to, I'll show you it on the screen, but scroll down to here, and that's where you can find free cash flow on the key ratios page. Free cash flow is brilliant because that's the money a company makes after paying off all of its payments. So all of its interest payments, all of its debt, all of its capital expenditure, so the cost of running the buildings, the infrastructure, the equipment, that's the money that's left over every year that they can then reinvest in the business or give to you as dividends. So that to me is the real profitability of a business. It's free cash flow. Now, number 3, the investor relations page of your stock that you're interested in buying. Now, I know I said this is a way to quickly evaluate stocks, but if you are starting to get the idea that you're interested in this stock, I deeply recommend going to the investor relations page and looking at how they intend to grow their business, and just sort of very quickly gauging whether the business that you are investing in is repeating the business that it's done before, or whether they are intending to go into a new industry. And if they are going into a new industry, then part of your due diligence is working out how successful you think they are going to be at doing that, how likely that is to happen. So, for example, Tesla would go into the car charging industry, and I think a lot of people would think that's a wise new industry for them to go into, whereas Facebook going into VR might be a bit more of a gamble and something that you think is less likely to get the incredible returns that it's gotten over the last 10 years. Another example would be Greggs. It's a bakery business in the UK. They are going to be building new stores in the future, and new stores are an easy way to predict future cash flow because it's likely that one store is going to make just as much as these new future stores. So it's easier to predict the future free cash flows. So if you do a free cash flow model, it's incredibly useful to understand how the business intends to grow, because that tells you how likely that free cash flow model is going to come into fruition. Number 4, a really fun site is one called Dataroma. The world's largest investors, when they buy stocks and shares in America, have to file them with the SEC. This site takes those filings with the SEC and puts them all into one place, and you can see the top 10 stocks that super investors are buying. You can actually delve into the portfolios of a company like Berkshire Hathaway and see what positions they're adding to or taking away from or have added into the portfolio in the last quarter. Now, I don't recommend blindly following these super investors, and I'll get into why, but what I do recommend is seeing what they're buying and then going to these companies' financials to see what the super investor potentially saw in this stock to begin with. And that can really help inform your trading strategy, because once you begin to realize that what these super investors are looking for, you can then apply that to your own investing strategy. In some events, you might find a stock that super investors have bought, go to the financials and agree with them and think that a particular trade is very good value. In that event, you might want to buy some of the stock. Just make sure that you like the stock, because these super investors at some point, if the trade goes down in value, just as one example, might sell the stock purely for tax evasion purposes. So they can close the trade, write it as a loss, and they will pay less in taxes, and then later on buy the stock again. I actually talk about this in my Alibaba video, tax loss harvesting. There'll be a link to that at the end of this video. So the pro of Dataroma is you get to a peek inside super investor portfolios. There are 2 cons. The cons are, 1, this is not the entirety of the super investors portfolio. You don't get to see what they bought in other countries, and you also don't get to see what their short positions are, and you don't get to see what their private equity investments are. So you're only looking at a small portion of their entire portfolio. A lot of their wealth is likely not even in stocks and shares. Finally, number 5, the bonus site, Stock MVP. This site is like Yahoo Finance and QuickFS all rolled into one, plus a hell of a lot more. But you do have to pay for it. It's £20 a month. Now, let's first talk about the pros before we get into that, because this site has some really cool features. First, with the subscription, it doesn't just have financial data going back 10 years, it can have financial data going back 20 years. Next, you can make custom card pages of the most important data from the balance sheet and the most important key ratios of the data that you feel is the most important to valuing a company. And while QuickFS only has the financial data from the balance sheet and Yahoo Finance has the balance sheet combined with the market capitalization information and graphs, this site has both of them combined, plus, as I've said, more back data. So Yahoo Finance only has 4 years, this one goes back to 20 years. Another reason I like this site is it was newly created by fellow YouTuber LWT Trading. His videos are brilliant, he's very knowledgeable.
And there's one big thing investors need to do: a bottle of whiskey, but there is still one thing you need to do: a bottle of whiskey, unless one thing. The French.
He also has a master's degree in economics, but because the site is new and the user base is small, he is actually more responsive than a site like Yahoo Finance. So it has as much, if not more, data than Yahoo Finance and better backlogging and the ability to download Excel spreadsheets. But also, if there are any issues on the site, the data fixed or have those issues brought to light very quickly. Now, if you do think you'd be interested in Stock MVP, if you use the code HJGWhite, you'll actually be supporting my channel also. If you don't use this code, it will still be a £20 per month subscription. However, I will get absolutely no credit for referring you to the platform. Full transparency, at this point, I'm not being paid by Stock MVP at all. I am just helping them get more awareness for the incredible platform that LWT Trading on YouTube has created. Now, I know £20 can feel like a lot of money to some people. It's 2 Netflix subscriptions after all. So the first thing I want to say, you absolutely don't have to purchase this subscription in order to get this financial data for free. There are other sites, as I've mentioned in this video, QuickFS and Yahoo Finance, and also just going direct to the SEC filings. What this £20 a month does is save you an enormous amount of time and helps you compare different companies much faster. And if you've got a portfolio, say, of around 10 grand, I think this method, this site with this data could easily make you the 2.4% extra growth you need to justify this subscription. I've seen a lot of YouTubers talking about these are the books you should read, 5 books that you must buy to be an amazing trader. And while I do not deny the value of reading and the value of books, but a book does not contain financial data of companies. Only websites contain actual up-to-date information on stocks, which is the real way that you actually end up making money in buying stocks and shares. And so if you are someone that likes to purchase a lot of books, I think it's crazy that you don't pay a little bit of money per month to have access to a broad spectrum of really detailed financial data. I used 10K as the amount where it would become worth owning a Stock MVP account. If you have less than 10K, this site can become really useful for you to learn your investment strategy. However, what I think is what you should do is use the free sites until you've built your portfolio up to 10 grand, and then this site becomes really worth it and you can use that to then accelerate the growth of your portfolio from that point. Having financial data is key to making informed decisions. By the way, guys, if you want to just trial Stock MVP, I spoke to LWT Trading, and while he didn't want to do a 30-day free trial because he didn't want people to forget that they'd signed up to the platform and then accidentally pay at the end of 30 days, what you can do is you can pay for a subscription, and if in 14 days time, or if you just immediately use it and don't like it or don't feel it's worth it for you, you can ask for a refund within 14 days. So if you want to trial it, you can pay for a subscription and then ask for a refund in 14 days. So just make sure that you do ask for the refund if you sign up to the site and do not like the service. By the way, guys, as I've said, I'm not paid for by Stock MVP. The only way I'll get any money from referring you to the platform is if you use my code HJGWhite, which I'd be extremely grateful for, because obviously at the minute I do not have enough subscribers on YouTube to become monetized here. So the ultimate goal is that YouTube monetization is all I need in order to create these videos. But in the meantime, it would really help me out if you use my referral link if you want to join Stock MVP. But please only join the platform if you feel it is right for you. So yeah, that's all from me. Also, by the way, that's a good time to mention that if you could subscribe to my channel, that would be fantastic. Subscribing is free. That's all from me. Thank you very much. Goodbye.